be here. We have a lot to cover today on this panel around leadership accountability. I am thrilled to be here with you, with these panelists. So I'm going to jump in with some intros, and then we're going to dive right in. So to my left, to your right is Manny Alves, who is the general counsel at John Hancock. Below him is Gregory Williams, who is a managing partner at Wellington. And to our far right is Michael Ennis Thompson, SVP at TD Bank. And in the middle is Quincy Miller, president of Eastern Bank. And I am Demetrius Russell, CEO of Venn Diagram Partners. Given that this conference is about leadership accountability, particularly post George Floyd, we thought we would level set with the audience and define what we mean when we talk about accountability. And I found a definition from the Business Dictionary that I think is appropriate for our discussion. So I'm going to read it so that we can all understand what this is. And then we're going to talk about the 5 tips of leadership accountability. Then we're going to jump into some questions. Then if we're managing our time properly, right around 11:40, we're going to open it up for Q&A, because I'm sure there's going to be a lot of questions that the audience is going to have. So with that, here's how we defined accountability. And so accountability is the obligation of an individual or organization to account for its activities, accept responsibility for them, and to disclose the results in a transparent manner. That's how we're defining accountability. And here are the 5 tips for leadership accountability that we are offering the audience, and our panelists will be infusing these tips into their responses so that you can see how you can activate these tips. So the first tip is watch your language. As leaders, using respectful and inclusive language is vital for today's leaders. Number 2, take pause and be honest. Again, as leaders, we must bring a posture of humility to leadership. We don't have all the answers, so we're counting on you to help us with those. Number 3, work to fix the problem. We have to give clear direction, and in some cases, lend a helping hand to fix problems. Number 4, think of what is best for the company. Don't act out of self-interest, act out of enlightened self-interest. And we'll talk about what that might mean for you as we move along. And then number 5, you got to step up to the plate. The buck stops with you. Take ownership for your actions and your decisions. Now with that, I have the pleasure of, again, asking this question. We're going to kick it off and get right to it with a question to Mr. Michael Ennis of TD Bank. And what he asked me to ask him to share with you is, when George Floyd was murdered, a flurry of companies, many of them are in the audience, including those in banking, made promises to racial inequities for customers, colleagues, and communities. What advice, Michael, can you share about how to have difficult conversations with leaders / bosses that haven't experienced racial equity but are tasked alongside you to address it? That's part A. And part B is, what advice do you have about holding leaders of the organization accountable to you and the public for change? So Michael, kick us off.
I appreciate questions and appreciate being here at the Men of Color Conference. So in terms of, how you work with leaders to make them comfortable in terms of what they're accountable for, you have to really understand your role as an influencer in the organization. You have to be comfortable and have those relationships within the organization so that you can really build on those relationships to get things done. It's also tough because it would appear as if being Black in the organization that you're carrying this load, but I think at the end of the day, it is really the responsibility of the CEO to really set the tone over what's going to be done. I think fortunately for me at TD, I think when the George Floyd events happened, we established what was called a Black Employee Network in the US. And there are about 8 or so senior Black executives had an opportunity to really meet on a regular basis with our CEO. And he really tasked us with coming up with ideas and things that we could do that would be tangible in support of the pronouncement that TD made, and also in terms of how it would support, address inequity in Black communities. So that's the first thing. The second part is, and read the second part to me again, D.
Sure. So what advice do you have about holding leaders of the organization accountable to you and the public for change?
And I think I'll kind of go to your definition or the definition at the start of the conference.
Right.
To me, and just a simple boiled down way, accountability has consequences, right? So you really have to have that tough conversation with your senior leaders and really lay out what the implications are for not doing what was committed. I mean, we're in the financial services business, and we're about customers. We're about brand, and so you lay out what are the tangible things from a business perspective for not doing the things that you've committed to, and then instead of complaining, come to the table with potential solutions. One area that banks have been working on, a lot of companies have made commitments around trying to employ more Black talent at the executive level,
right,
more people on the boards. Those are more longer term things. Some of them are short term, but it's going to take a while. So we haven't seen a lot around that space, but what we have seen is kind of a war on Black talent. That's a different story. But areas where I think banks have stepped up is really trying to support community development financial institutions and minority deposit institutions that are Black owned, and they continue to do that. So in that space, through that forum with our CEO, we were able to have him agree to a $100 million equity fund that would be invested in small businesses, 30 of which through CDFIs to Black-owned small businesses.
Thank you, Michael. Let me shift over to Quincy, because I can see him chomping at the bit for this one. So
are you going to give me a new question, or can I opine on this one too?
I want you to opine on this one because
there
are two key things that Michael said, and that it starts with the top from the CEO down, and you're sitting in that seat. And then and the second thing is our decisions have consequences. And so, Quincy, the floor is yours.
Yeah. So Michael's spot on, and so I'll come to the from the top in a second. But this idea of how do we hold, whether it's financial, I know this is about financial institutions, but it's really, any of the companies that made these commitments post George Floyd's murder and this racial reckoning in our country. And, I'm sure we have, as this men's group is, brothers from all different levels within the corporation, right? And it's sometimes easy, if you're at the executive level and that area, to sort of create accountability. But I want to just build on Michael's point to say, particularly this idea of employee networks. If your company has a Black or Latina or employee network, et cetera, that's one great place to create accountability for your company and have influence, even if you're at, say, a middle management layer. And the reason why I say that is because what I would be doing if I was leading that network or part of that network, the question for the CEO would be, particularly if you don't feel as if the company's made enough progress to that commitment, which I know many of us here in our companies feel like they have, but if you're somewhere where you haven't, the question would be, we as an employee network, we want to know what's the impact of that commitment been. And as employees and as colleagues, it's almost worse if we made the commitment and haven't followed through than if we would have never made the commitment at all. And so I think if you're trying to figure out how to create influence in your company and you're not sitting at the C-suite level, leverage that employee network to say, ask the CEO what's happened since that commitment, so that we as employees can be proud of what our company's doing. So that would just be one piece of advice that I would add and share to that. But like Michael said, it also, and I know in a little bit of an email prep for this, I went on a bit of a rant and said that, we can't simply look to, the most senior executives of color to hold the company accountable. Because the reality is, as much as we all want that to be true, that's not sustaining. It may be sustaining in this moment because of the pressure that's been on companies, but the reality is, if our CEOs do not embrace the fact that this is good for the overall company and good for our community and good for America, and see it as a business imperative, the reality is things won't change. For all the commitments that we've made, 400 years of systemic inequities aren't going to be broken down in a year or 2 or 3 years worth of commitment. So we need our CEOs to step up. To your point, Demetrius, they may not all, most of them don't have the shared lived experience of what these inequities mean to them, but it's very easy for them to be woke. If they're not woke now, I worry that they're ever going to be woke over this time period. And so I think that's really, as you think about working for a company and driving a company, it has to start at the top. It has to also include the board. And then it's together with the senior Black people of men and women in the business and the employee networks and the grassroots colleagues in the front line closest to the customer that's going to drive the change.
Thank you, Quincy. Let's get another perspective outside of banking. Manny, I see you shaking your head and you're smiling. So why don't you start, and then I'd like to have you, Greg, follow Manny, because one of the things I do want to also make sure we talk about is what I like to call the magic middle, because oftentimes I'll talk to CEOs and boards and they've junked the Kool-Aid. Like, this is where we're on board with our DI journey. However, operationalizing that at the middle management level, that's where we get stuck. But we're going to come back to that. So Manny, if we could hear from you from the insurance industry, and then Greg, if we can hear from you from the investment management industry. Thank you.
Thank you, Demetrius. Thank you, and thanks for involving and inviting me to this conference. I think this is a great conversation and very timely. I completely agree with what Quincy was just saying. It's important to, I view the role of those of us of color in senior leadership to empower these employee resource groups, to ensure that there's a base where folks are in fact thinking about issues of accountability. But there's something I wanted to put on the table, because as I was thinking about this, it reminded me of a quote, and I had to go look it up, from Martin Luther King, when he was talking about the visceral reaction of just throwing money at problems. And the quote is this: "Philanthropy is commendable, but it must not cause the philanthropist to overlook the circumstances of economic injustice which make philanthropy necessary." I worry, and Quincy, you said it, that 3 years from now, the next crisis will emerge, the money will have been spent, and the focus will have gone away from the economic injustice which made the philanthropy necessary. And I think that's where empowering those, and I agree with you, Quincy, it can't be those who are in the C-suite, but empowering the employee base, these employee resource groups, will pay dividend, because there'll be others keeping score. There will be, the commitments have been made, and frankly, I'm hoping, as in the case of my company, it's not just financial, right? It's increasing representation. Someone once said that talent is distributed equitably and equally, but that opportunity is not, right? And I think that's where we need to put the focus: increasing opportunity. Turning to sort of what's going on in my industry, and this is actually something I'm heartened by, is that for the first time, I think, as an industry, there's a recognition of the role that the products that the insurance industry sells plays in things like intergenerational wealth, right? So access to those products to communities of color is a key way of justice and economic empowerment. DEI across companies, right? Those are conversations that are happening now in the boards of directors of insurance companies across the country, and focus on investments in sort of underserved communities. This is great. It's good to talk about it, but I'm glad you started with accountability, Demetrius, because that's where keeping score. The moment it may have motivated the CEOs in these companies to make a lot of commitments. I think all of us, it's incumbent on all of us to ensure that, fast forward, pick a time period, what has happened? And to Quincy's point, I think it's important to do it from the bottom up to reach that middle that we're going to talk about, because I agree. Some call it a permafrost, right? That the board and the CEO are on board, but things aren't permeating down to the bottom. So
yes,
I'll pass that on to.
Great. Thank you, Manny. Greg, now let's, what do you think about this?
Yeah, and so thanks so much for having me here. It's great to see everybody and to address the audience today. Obviously an important topic, and we can get into it, but I'm definitely a poster child for why a day like today is important. But as we think about accountability and just, I guess, starting with overall diversity in the investment management business, clearly we know that from a percentage of representation, people from Black heritage, people from Latinx backgrounds are woefully underrepresented. Unfortunately, it did take a catalyst like all the situations of racial injustice that we witnessed more recently to really kick things into gear. But I'd say, a lot of firms, including ours, have been on a path for a while of trying to figure out ways to increase diversity, equity, and inclusion across our firm and across the industry overall. As I think about just accountability, one thing, and 100% agree with everybody, it's got to start at the CEO level on down. Senior leaders from diverse backgrounds need to have an impact and have a voice and come to the table with ideas. But one thing at Wellington that we identified really early on, when we saw what happened with George Floyd or Ahmaud Arbery and the other situations, was to say, everybody was feeling stress. Who cares about these issues of racial injustice, whether you be Black or not? But importantly, the people from Black heritage were feeling a lot of stress at that point in time. And it's like, it shouldn't be incumbent upon this crowd of people within the organization to educate everybody else about the challenges that we faced for generations, right? And so actually at our firm, and this will lead into accountability, at our firm, we started a group called Upstanders. A few people, from the majority population said, again, we shouldn't be pressuring, Greg and Shauna and others at the firm to do everything and to educate us. We need to take accountability for ourselves. And if we want to participate in balancing out the access to this industry, balancing out the access to capital, we need to educate ourselves and be held accountable for doing that. So we actually started a group called Upstanders, where people decided, hey, I'm going to take it on the onus on myself to learn about Black culture, Black heritage, the challenges that people from Black heritage have faced over the years. And it's been a series of videos, meetings, reading material, etc. And ultimately, I think at the end of the day, people feel more educated today than they did last year, than they did 5 years ago, without a doubt. And we talked about getting buy-in, and we will get to that in the middle management levels. But I think that's important, right? People need to understand the issue. And clearly there were images on TV that were violent and tough to watch. But sometimes those images can be fleeting in your mind. But once you start to really internalize it and understand it, and that internalization, I think, comes from deep study of the topic, I think ultimately you'll end up being more involved in engaging in changing things. And at the end of the day, you'll also be willing to step up and to actually be accountable for the actions that you're taking inside of the organization. So punchline is, I think, we need to broaden out the accountability framework and make sure that everybody in the organization, whether you be Black or not, is involved in the efforts that are happening across any firm.
Great point, Greg. And let me sort of take a couple of things together and bring it back to Michael, because his second question actually addressed some of the things that Wellington's doing in terms of creating this Upstander program. Because as leaders of color, by definition, we take on this responsibility every day we show up in our organization by representing who we are. And a lot of us were raised that we had to be twice as good to be just as good. And so one of the things that was different about the summer of 2020, unlike any other social movement, one, it was global, two, it was multi-generational, and then thirdly, the corporations jumped in. And so when the corporations jumped in, I suspect that every one of you was asked, can you take a leadership role in our organization, indeed be the face of it to do this work? And then what we found was it's a lot of work just for us to do. And so in terms of workload management around this issue, unless the majority is as outraged about this issue as we are and want to jump into the fight, we're not going to make much progress. So let me come back to you, Michael, and talk about what you're doing at TD Bank that, to Greg's point, broadens the responsibility that goes beyond just those of us who are on this panel to move the needle, if you will. So, Michael, the floor is yours. You're on mute.
Yep. So it's an important point, and a place to start is there was a SHRM surveys that indicated that 35% of Black people believe discrimination exists at work versus 7% of non-Hispanic whites. So that's a huge disparity. So I'm just kind of bring it back to your point about what's happening in the middle. So the board will have direction, but if you have folks that are in the middle that are not believers, it's very difficult. And so I think our job as leaders in the organization is really try to get to those individuals and demonstrate why it is important for them from a business perspective. I think most of these individuals understand economics, and that's the way to really present it to them, not really try to get to their hearts. And also share some of your own personal experiences with them. I think for us in these roles, we're probably viewed as the fortunate few. We were, we had that golden spoon, but we didn't. Most of us here came up in families that, for me, my mom immigrated here from Jamaica, and was a nurse, but tried to get us here, worked for as a maid for folks in Long Island, right? So sometimes when you make those connections and then even share your own experience in terms of what you have experienced in terms of racist behavior towards yourself, it's sometimes appalling to them. So I think that's the way to really get at that middle, because it's important. If they're not on board, there will be no accountability because they just don't believe that these issues exist.
So Quincy, thank you, Michael. Can we pick up on that theme about this magic middle? Because I'm wondering if we need to go beyond behavioral economics to incentivize the magic middle to actually operationalize and execute on the DEI goals. Because to Michael's point, the business case has been proven, right? I don't think we're working with organizations now that still need that. It's more of the how. So can you tell us, you give us your perspective on, how do we activate the magic middle to carry out what the board indeed and what the CEO and president indeed want to have happen?
Yeah, so I will, though, I'll just disagree a little bit, Demetrius. I'm still not sure everyone really understands the business value of diversity and diversity of thought. So I want to give up the ghost that's already accomplished. We need to continue to be able to articulate that for people. But I think it's better now, particularly in financial services, than it's ever been in my 24-year career. So I will agree with you from that perspective. So I'll use the Eastern example. At least here in Boston, I know we have our own little microcosm here in Boston. When people want to talk about DE&I and diversity, they sort of come to Eastern. Well, what did you do? How did you do it? How did you get a diverse board? In many ways, after this past 18 months, we really reflected that, in our own little microcosm of financial services in Boston, we may be a leader, but in the reality, in the goal of equity, we are so far behind. And so, yes, we have greater diversity. We have, our philanthropic commitment is completely around it. But, this is all the sales businesses report to me. When you look at our wealth business, there's not equity in our wealth business. When you look at our commercial banking business, there's not equity in our commercial banking business. Is there diversity, and is there more diversity there than most banks? Yes. But is there equity? Does our population of people of color, women represented across those divisions like the population where we live? And the answer was no. And so we really sort of took a step back to how do we create greater accountability? And again, it's an interesting organization because we're so committed to this. Obviously, our last two board chairs, the last one was a Black man and the current one's a Black woman. There's very few Black board chairs in financial services in all of America, let alone the last 15 years. But what we found was we weren't making progress as deep as we needed to be. So Demetrius, we decided we were going to implement goals, and people were shocked. They're like, what do you mean we need goals here at Eastern? Like, this is what we do. When you look at our employee survey, and we do an employee survey every year, and we just got done with it, the largest word, we ask people 3 words about Eastern, the largest word in the word cloud is diversity. But yet we don't have diversity in wealth and in commercial and insurance. Think about my partners who are on the phone today, right? Those are our 3 intentional areas that we're working on. So we decided that we were going to create specific DE&I goals, part of our Road to Equity plan for every SVP. And for us, that's a high level. We're a small company. So, I mean, that it gets every business. And, you know, it's basic things like many of you may have worked on, but from a company who's embraced this, what we realized is unless we created really specific accountability around diverse slates, around equity hiring, meaning if 13% of the population in Massachusetts is Latino Latinx, then 13% of your division should be Latino or Latinx. I mean, think about the difference in mindset from diversity to equity that creates with a manager when we lay down those sort of guidelines. And so whether it's hiring, supplier diversity, talent development, that's really what we really stepped forward in, is creating very specific expectations and accountabilities at a very broad group of colleagues.
Thank you for that. The goals, that's the teeth in the plan. Thank you for sharing that, because a lot of organizations, when we talk to them about setting goals, are reluctant to do so, because once you set the goals, to your earlier point, people are going to hold you accountable to those goals. And so if we could bounce back to Manny and then Greg to get your point of view on this topic, that would be really helpful for us. Thank you.
Thank you, Demetrius. I'll go first and pass it on to Greg. I totally agree. I think goals, what isn't measured doesn't get done. It's critical. Right. At John Hancock, we've committed publicly, and Manulife, the global company, that and it's not just numbers. It may be easy to hire at certain levels. The goal that we've committed to is to increase folks' representation at the director and above level by 30% by 2025. Now, you could say it's not what Quincy just said. It's not measured against the representation of the population externally, but it's something that we will be held to account on, which is the subject of what we're talking about. And the other aspect of this that I think is critical is to have people like Quincy talking about it as the president of the bank. In our case, in the US, the woman who is leading our DEI efforts is part of the executive team, reports directly to the CEO. And the tone from the top, from the CEO, is this is critical. We've had several programs, days of understanding, devoted days to conversations, sort of empowered our employee resource groups to have these open sessions and bring in speakers to issues of inclusive language, right? Allyship, this issue that Greg was talking about in terms of it can't be on the shoulders of just folks of color, right? This is a community issue. If this is going to work, and we're going to back to the opportunities being unequal, we're going to create opportunities for everybody. Everyone has to be party to this. I like what Greg said. Make it as a goal at the supervisory level. That's great. I'll follow that. Not Greg. I'm sorry, Quincy. I'll be curious to see how that works, because that ought to be the ultimate goal, right? Be representative of the folks who we're trying to get to buy our products, right? So this is great conversation, but it starts at the top with the tone in empowering people and ensuring that the hiring is not just, I don't want to demean any role, but it's easier to hire at certain levels, but we need to have representation in leadership. I think that's the key.
Greg, can we pick up from there? Thank you, Manny. And then I'm going to add a little extra to it, Greg, to talk about what your clients are not only asking, but demanding of your institution in terms of representation. So, because what I found is if the clients are demanding it, then guess what? People like Quincy, you have to pay attention to it and respond. So, in his role as well as Michael's role. So let's pick up on this theme of accountability from that standpoint. Thank you, Greg.
Sure. No, and then that's exactly where I was going to go is just, as I've told people internally at Wellington, we can generate all the alpha in the world, but diversity, equity, and inclusion is such a key focus for our clients that if we don't get that right, we can be the best investment manager on the planet and they still won't invest with us. So to kind of the debate over whether or not, it makes sense from a business perspective, to me, hands down, that definitely gets people's attention, especially, as we see just even email traffic inside of the firm. And, we always report back and kind of debrief on client meetings. A super high percentage of them include, even if you're talking about investments, there will be some diversity angle to the conversation as well. So to me, that's the proven point that that clients are very much focused on it. Just to take a step back, just again on the accountability, and Demetrius, I know you asked the question is, should it be tied to economics or not? Right now, it's not directly tied to economics for us, but I would say, importantly, it is part of everybody's performance review at our firm. I mean, it's an explicit piece of how you're judged at Wellington. And I'm involved in a lot of conversations when it comes to just people who make managing director, who make partner, and you better believe that we discuss those elements of their cultural fit within Wellington. And that's a big component of it is, are they a champion of diversity, equity, and inclusion? How are they thinking about it? How are they expressing that in the work that they're doing at the firm? So to me, it's tough to make a direct tie, at least right now for us. But again, it does come up pretty consistently as we think about how people are performing and contributing to the organization overall. I'd also say we're working, this is in process and will be rolled out, but we think an explicit accountability framework is important for team leaders, for managers of organizations inside of Wellington. And so we are developing an accountability framework where it's kind of a 3-year look back and a 3-year look forward on kind of where we've been, what is the trend been over the past 3 years, and then ultimately to the point of goals, where do we want to go? Where do we think we can get to? And to me, these goals should be, not only aspirational and attainable, but also somewhat aggressive, right? Like we need to put action behind all of the words that we're speaking in forums like this. And to me, ultimately that statistic, and I agree with Manny, it shouldn't always boil down to numbers, but ultimately that is what our clients are judging us on. We have a lot of clients who ask us for reporting on our diversity stats, and that's only increasing. So in some ways it's got to be on paper and it's got to be in the numbers in order to convince people that you're serious about evolving your organization, about evolving the overall industry.
Great point.
Hey, Demetrius, I just want to connect something that Greg just said. This
Please.
About this, how do you, with the customers, particularly in the wealth space, because this is the conversation I've had about the wealth space. I think the people have asked this question all the time. What's different post all of these murders in Floyd? I mean, this has been going on for generations. Like, what's different? And we talk about the globalness, the technology. I actually think what's different is the millennials and Gen Z. I think that's what's different. It's the generations after us who's different, who embrace diversity, equity, inclusion, much greater than Gen Xers and baby boomers, et cetera. Their value proposition is so much higher to that. And if you look at wealth management, in the next 5 to 10 years, we're about to see the largest transfer of wealth in US history from the baby boom generation to a bunch of millennials who are the largest workforce and the largest group of consumers right now, to Greg's point. I mean, the math behind it is clear, particularly in that industry.
100% agree. And I'd say, sorry, Demetrius, I would just add to that point. Yeah, I would just add to that point that historically Wellington is, you guys are all Bostonians, so Wellington has typically kept a pretty low public profile. But with all of this happening, we've made the decision. It was pretty clear that we can't be silent or can't stay behind the scenes, right? Like people are going to want to know what a sizable asset manager thinks about these issues. And not only do our clients want to know, but also prospective talent that we're looking to recruit. They want to know who we are and what we stand for. And to Quincy's point, like if we're going to be a magnet for talent, we need to be out there and have a presence and have a view on these issues that we're expressing to the broader marketplace. So I think that's critical, as we look to bring in talent to our firm or to the industry overall.
Thank you, Greg, for weighing in on that again. Let me introduce this, one of the toughest conversations that I have with people who are naysayers and skeptics, to Quincy's earlier point about, for a lot of people, the business case hasn't been proven, right? And the question that they pose to me all the time is, okay, Demetrius, I need you to demonstrate causation, not correlation, to us achieving these results that the McKinsey studies, the BCG studies, the Catalyst studies show us. We need causation. And one of the things that, both to connect Quincy and Michael's point around goals, that's one way to get there. So I want to ask you about that. Does that come up in your conversations, tough conversations with people internally about, why am I doing this? Does this really cause the kinds of results that we want, or is it just correlation? So can someone speak to that? And then I want to ask this question that Manny posed to us, and then we'll open up for Q&A because I'm mindful of the time. So at 11:40, we'll transition over. So please, can someone speak to that?
Yeah, I'll just jump in real quickly. I think it's more correlation. Again, within organizations, just the topic about race is very difficult to discuss, right? So how you're positioning it is very challenging. And, I haven't had hadn't had anyone ask me to prove why it's important. But I always offer why it's important for many reasons. From a brand perspective, we're a financial services company. We're in a footprint where we have a very diverse population. So I offer that the changing demographic is necessary for industry to really understand the buying power and the other aspects of this population change. And the companies, I always say, that do it well will be the winners in the end. I mean, 2030 to some companies might seem far away, or 2040 when it's going to be even more change. But you have to prepare now. You have to really embrace and get your brand to be preferred by a more diverse set of customers. And this focus on probably wealthy customers has its limitations. I mean, to me, the mass market is what drives this company. And one thing I always say when reports come out about, reports come out about Walmart and Target and Best Buy, that's where the mass of the population shops. No one's talking about the high-end stores, because they have their place, but it's not what drives this economy. So my example there is, you have to go after that segment, and that segment is going to be more diverse, going forward. It's more diverse now, and you need to embrace that.
Thank you.
Demetrius, if I could, I'd fall more squarely on causation. And let me talk to you about my world. So law firms that, as general counsel, I hire to do legal work for us.
Right.
Now know that I'm interested in having folks of color working on our matters. That's moving the needle. They now feel the need to look after associates who, in the legal field, it's usually they bring in diverse classes at the beginning, and 4 or 5 years as you approach partnership, there's a cliff. Folks aren't projecting forwards into partners, right? So that is causal. You want my business? Show me that I'm interested in the folks of color working on my matters. That creates a causal relation. Also, corporations work through its agents. Talent management's critical. If you accept that talent is distributed equally, creating the ability for talented folks to join you, that's causal. Look, if you create an environment where folks of color aren't comfortable coming to join you because of whatever reason, they don't want to be the token, they don't want to be the sole person in the organization, you're going to be losing the battle in retention, in attraction. And similarly, if you're not advancing folks internally, they're going to leave, they're going to go elsewhere. So I think perhaps it's not universal, but it's become more and more a direct causation issue that's going to affect the bottom line. I agree with what Quincy said, that we need to be cautious and continue. Maybe we need to make the case again and again and again. I'm not sure it's universally accepted yet, but I think I'm seeing that link being more if A then B kind of thing. And it's maybe this is a space where the legal field is moving perhaps faster, because as they seek business from folks like me, representation is important. And I think hopefully that's a step in the right direction.
And I'd agree with Manny, and I commented on that when it comes to our clients. Clearly, they want us to be a more diverse firm. I'd also say one of the key things that has developed over time for us is, we were thinking about how can Wellington really participate in balancing out the access to capital people from underrepresented backgrounds haven't historically had. So we're in the midst of launching a fund where we're going to invest in diverse owned GPs. We're going to invest in diverse founders and entrepreneurs. And to the point of causation versus correlation, if I think about kind of the motto of our deal team, Jackson Cummings, Van Jones, Frederick Gross, and Sasha McKenzie, some people that folks on the line might know, one of their mottos is multiculturalism is eating the world, right? So if you aren't addressing or sharing your product with a multicultural audience, you're bound to fail. And you can see it in the numbers. So if you think about exits in kind of VC space, they're higher if the board is more diverse, if the C-suite is more diverse. It's in the numbers, right? You mentioned the McKinsey study, Demetrius. I know they've done a few of them, but they definitely prove the case that profitability for firms that have more diverse, leadership, et cetera, the profitability is higher. So to me, it's a direct link to economic outcomes that if you aren't convinced that it's important, then you're definitely going to miss the boat.
And on that note, it's 11:42. We're going to open it up to the audience for Q&A. This has been a robust discussion, so we're really looking forward to the questions. So here you are, you have us.
All right, thank you all for such an enlightening conversation. This is, I live this every day as a chief diversity officer, and I can tell you that it warms my heart to hear all these business leaders really talk about why this is important. There's correlation, certainly there's causation. I see it every day. I see it when we either win deals because of the diversity, and the way that we may service our clients is better than our competitors. And I see us lose deals because of the same, because we're not as well positioned to service our clients, whether it's in language, in country, culturally, and multiculturalism, Greg, as you just mentioned, really is eating everything else for breakfast, right? So we need to, as business leaders, be mindful of that. But there are a couple of questions in the audience that I think that are relevant, certainly to the conversation you're having. One question, and I'm just going to read it. I've observed that we have received support around building representation in early middle career employees. However, still struggle with the organic senior management growth and representation. So what are your thoughts on what can be done to increase at the SVP level and above?
Good one.
And anyone can take that.
Well, I think, obviously, I think it was Manny or Michael, I forget. We've had such great depth insight here. This idea that you can't just start at entry level. We'll be here 30 years from now if we're talking about just starting at the entry level, right? I think that was really key. And that's why part of this is being really purposeful on talent development. And I've said 1,000 times in my career, when I started in banking, my career goal was to be a successful branch manager, because that was the only place I saw a successful Black person. And luckily for me, people saw talent in me that pushed me along and challenged me to think bigger and do more. And so that's just a fundamental process of good leaders is, how do we look at talent within the organization, let's say it's at the VP level, and say, who is the talent? Why have they not gotten to SVP? What do we need to invest in them to help them to make that step forward? Or what's been holding them back unfairly in making that step? So I do think, Paul, to that question is, you have to be really intentional with developing your talent internally for promotion. And then, the challenge comes in, particularly in this industry, when it comes to recruiting at that level, because we have, decades of history of not making those investments in that development, the talent pool is slimmer. I will never say I can't find them. Like every time I hear that, I want to cringe. So there's plenty, look, there's talent on this call here. So you do have to do both. It's just not about recruiting, but I think a big part of this, of getting people to SVP, is looking within and creating those pathways for your colleagues.
Yeah, I'll probably just add that, we really have to be, and I think you said this, that we have to be intentional about it. So you have to be looking for those individuals. When we have talent management discussions, we also have to force our managers or people who report to you to explain why there aren't more diverse people having the top talent conversations about, because most companies are investing in what they consider their top talent. And you have to be intentional about how do you move those individuals along to be considered. And, just like, I've been a beneficiary of someone pushing me as well, right? So you have to be that kind of agent for that individual within the organization and give them support. Now, when I was coming up in financial services, there were no Black leaders to push me. I had white leaders who believed in me, so it could come from anywhere. But our charge is really to understand where the talent lies in our organization and be supportive. Like today, right, now I'm doing informal mentoring of 2 young men that I've met that I just been enamored with their ability. And every chance I have, I expose them to senior management so that they can understand where they are in the organization, their talents. And I do think if we all collectively do that, we can help, get that middle, management level up to the SVP level.
Absolutely. Demetrius, I think you wanted to chime in on something.
Just 2 things that have been mentioned. This is a really important issue of helping people progress throughout the organization, because in our research, the number 1 reason why people leave is the lack of career growth and career pathing. That's why we leave. So, and the number 1 reason why we stay is because of career path and growth opportunities. So to Michael's point, mentorship, to Quincy's point, sponsorship are 2 key ingredients that we have all been able to avail ourselves to. And just a quick story about this. I was talking to a CEO out in San Francisco about who was going to be promoted into the C-suite out of 17 people he was going to promote 4. And so I asked him, how are you going to decide on who gets, into the musical chair of the SVP? And I was expecting a sophisticated succession planning answer, talent management answer. He said, look, it's really quite simple, Demetrius. We use the FCT model. And I said, okay, I'll bite. What is that? He said, how familiar am I with Manny, Greg, Quincy, Michael, and Paul? And how familiar are they with their colleagues, right? And then C is chemistry and comfort. What's their chemistry like with me and their colleagues? Because he pushed it down. It's not just the relationship with me, but it's how other people see him. And the third one was T, and that was for trust. You need to find it in 3 ways. 1, the trust is, to Michael's point earlier about brand. When he's out in the marketplace representing our brand, he represents it to the highest degree possible. 2, the other trust is that Michael delivers results that are consistent with the values of our organization. No shenanigans, he gets results. And then thirdly is that I have his back, he has my back, and the people have his back, right? Am I getting a lot of complaints about Michael's leadership or Greg's leadership within the organization? That tells me something about who he is as a leader. And so I encourage people to think about their FCT quotient and how they are sharing that with people that are different from them. And so I'll hand it back to you, Paul, for the next.
That's great insight. Great. I've always said, it really creates opportunity, and that's really the FCT model is about. And I think that as men and women of color, it is something that we typically don't manage well or manage as well as our colleagues for many differences. And I think we need to be a lot more in ourselves in creating so that more easily said that I want to shift focus, and perhaps we have time for one more question. This is to really sort of digitization, if you access to and the question is, Tyrone Ross.
Did anyone else have a connection issues?
Paul,
Yeah,
I think you
Paul,
might be bopping in and out, Paul. Let me jump in and see if I can pick up a little bit here on a couple of questions. And I was multitasking, so I hope I'm not covering same ground, but I don't believe I am. So there's a question here, panelists, around just the crypto community and blockchain and where we're going and these digital assets and historically excluded, marginalized communities and our participation in kind of the new form of currency. And just want to get your perspective on your thoughts on blockchain and cryptocurrency and the impact of these new, kind of ways of engaging in this financial kind of paradigm. Any perspective on that? And that, again, as it relates to our community, are we early? Are we late? Do we need to get more involved? Those types of things.
Gentlemen, do we have any crypto, Bitcoin experts here that would?
I mean, I wouldn't say I'm an expert, but I'd say it's definitely an area that we're continuing to follow and invest in and have expertise, particularly on the private side in the space. And I mean, I mentioned before this fund that we're raising. I mean, we're very focused on technology, and so we're definitely on the hunt for diverse founders, diverse entrepreneurs who are building companies in fintech. It's a big part of our overall fund. So. Tough to judge whether we're too late, too early, but I do think that there are companies that are out there that are engaged in the space. And I'd say as an asset manager, as we think about just blockchain technology, we think that's legitimate. As we think about cryptocurrency, we're still trying to get a feel for how that's all going to play out. But ultimately, we do think it's an area that capital will be flowing into in a place where we want to invest, because we do think there is some upside there.
Mm. As you all know, I was a banking executive for a hot minute. And, but one of the things, and I'm looking at Manny, as a legal leader in the legal field, and some of our organizations, I heard Quincy really talk about setting goals, and others really talk about setting goals and being transparent with our ambition. And sometimes I think in some of, the financial institutions and also within our legal profession, is concern about being very transparent with our numbers, being very transparent with our ambitions and those types of things. Just some perspective, Manny, on how can, our legal leaders kind of help us, be a little bit more progressive in thought around what we share with the general community. And then for our financial services, our banking folks, where we may have challenges internally about sharing. And, we're highly regulated industry, those types of things. Just curious how we're walking through or just making our way through this concern about just data sharing and where we are from a numbers perspective. So Manny first and maybe our bankers next.
Thank you. It's a great question, and I'll share a quick story. Early on, we sent the ABA, the American the legal associations in the U.S. have picking up this effort. But early on, we sent some questionnaires to law firms, asking them to identify the backgrounds of the folks working on our matters. And there were a couple who raised that technical legal issue. Look, we're not permitted to ask or disclose this. and if there was a trash bin, it's like, okay, they apparently don't want to work with us, right? There's a hyper-technical answer there that says we can't go ask. That's a false narrative. What you do is you make it voluntary for people to disclose, right? And I bet you if you put it that way, those who want to be known, that yes, my background is X, Y, and Z, they will come forward. So I think just asking the question, does the law permit me to ask, it takes you down the wrong path. There's a solution to that. What you do is you voluntarily ask your population, your employee population, to self-disclose their backgrounds. And the fact that a law firm of all places was standing behind that was a telltale sign that this is probably not someone I want to work with. So it's not an obstacle. I do think that there will be folks who are uncomfortable or who don't want to for whatever reasons, but there is a way to get to the data and to make it available. Here at John Hancock, for instance, we've asked folks to voluntarily disclose just so we get a baseline, right? So to achieve your goal, you have to have a starting point. Where are you starting from? And how are you going to say you've achieved the goal of increasing representation by whatever level if in fact you don't have a baseline? So, and we were pleasantly surprised, 90% plus of folks went on our HR platform and self-disclosed. There's no violations, there's no impediments to getting that data if you're asking folks to voluntarily disclose.
Maybe I'll jump in. I just say that, you know, at Wellington, we've joined this consortium called the Corporate Call to Action, which is an organization or a collection of investment managers. But the overall initiative was started by the state of Connecticut and the Ford Foundation. And really, it is a consortium of managers and the two allocators to try to figure out ways to evolve diversity in our overall industry. But a key tenet of that was the managers being open to disclosing information about their diversity profile. And so, you know, it took some time for us to get comfortable around that, but ultimately we decided that it makes sense to do it, like to disclose our EEOC stats publicly. And ultimately, I think what we found is maybe it's not that scary to put yourself out there a bit. And in fact, you know, that transparency, you know, again, leads us to needing to be accountable to evolve our numbers. And then if you're kind of in the same group with other investment managers, kind of that positive peer pressure to continue to push, to continue to be transparent is also something that's very valuable. So to me, the more transparent we can be, the better. And I think it sets kind of a baseline for us to grow from. So I'd encourage other firms to explore doing the same thing.
Yeah, I mean, I'll kind of, you know, bring us back full circle to this whole accountability thing. I mentioned, you know, that, you know, accountability has consequences, right? So to me, if companies are reluctant to really disclose this information and track it, they don't want to be accountable. And you know, that I think it's as simple as that. If you really want to be accountable and held to the consequences for not meeting your goals or your numbers, then, you know, they're not along for the ride. So to me, that's the biggest thing. I'll just, you know, pull it back to the whole accountability issue.
Yeah, and I'm going to stop us there. Just awesome.
Hey,
panel. Yeah.
Hey, I actually want to chime in here because, you know, you guys are, I will say, you know, people say they're fans of LeBron James and Kobe Bryant or whatever, but I've become a fan of each and every one of you guys on this conversation because you all have said a lot of things, especially when it comes to the challenges, when it comes to being a leader, right? I think people underestimate the amount of thought energy that has to go into what needs to happen when it comes to leading companies, organizations, and when it comes to even leading this country as a politician. Like I think it was Michael that mentioned, I'm glad you mentioned brand, like brand equity. I come from branding perspective, right? Talking about brand equity, talk about social equity. You know, it's having value and values, right? And understanding how that plays a role into your business outcomes, right? You also talked about balancing between, what I really gathered from what you guys talk about is balancing between qualitative data versus quantitative data. You're saying, okay, I have the numbers, but there's also qualitative data. Like biggest thing we talk about when we talk about George Floyd or what's going on in our climate is that feelings matter, experiences matter. So you can't undermine the experiences and the feelings of people and ride solely on the numbers. You got to find that balancing act. And as you guys are talking, I know Quincy has said a lot of great things when it comes to leadership and finding that balance between the actual information and data that you're collecting and what outcomes that you're really trying to get to, right? So I just want to commend you guys on like really talking about that, but I wanted to kind of speak up and emphasize those points, because that is really the biggest challenge, especially when it comes to leadership position, of finding that balance between qualitative and quantitative experiences, or the qualitative and quantitative data when it comes to making decisions as a leader within these economic space. So I just wanted to lead off with that.
Thank you, Christian. So we are at a lunch hour. Again, just a terrific panel. Appreciate your input, perspective, leadership. You know, the fact, you know, your firms are very well known and carry a lot of weight in our community, and it's good to know that we have brothers here at levels that think the way that you do, and really want to put your feet on the gas, frankly, in the way that we need for you to. So thank you for that, Demetrius, my brother. Thank you, man. I really appreciate you stepping in here and organizing these. All these fellas got, you know, great thoughts and are leaders in their own right, and you were able to corral them appropriately, man. So I appreciate that. For the audience, we will be back to you at 12:30, just after lunch, for another great panel. I think after lunch we have, just make sure here, we have our life sciences panel. So, you know, for the folks in the Boston area, we know life science here in the Boston area is like the driving engine of our economy here in the region. So welcome you all back to really hear from those leaders in the life sciences space. Thank you all.
Thank you.
Thanks, everyone.
Thank you, everyone.